Good morning and welcome to the Supply Me Capital PLC annual general meeting. Throughout this recorded presentation, meetings attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click on Q&A, scroll to the bottom, type your question and press send. However, due to the number of attendees today, the company may not be in a position to answer every question submitted. However, all questions will be reviewed with responses published on the Investor Meet Company platform where appropriate to do so. I'd now like to hand you over to David Ball, Chairman of the annual general meeting. Good morning.
Good morning, ladies and gents. I'd like to welcome you to the annual general meeting of Supply Me Capital PLC, which has been convened by a notice of AGM dated 6th of June 22. As you already know, my name is David Ball and I will be chairing the meeting. Before we move to the formal business of the meeting, I'd like to introduce you to my colleagues. So to my right, Alexandra Zamboni, Chief Exec, Chief Financial Officer, Amy Benning, Alice, who's the Chief People Officer. If I get these titles wrong, do let me know. And then Stuart Nelson, who's Head of Enterprise Risk Management. Online, which we won't be able to see, but two presenting will be Nicola Bonini, who's the Origination, Head of Origination. There we are in the middle. And Tom James, who's the Chief Exec of Tradeflow. So there's the team presenting, and we'll answer any questions as we go through. So the business of this meeting is set out in the notice of the meeting, which, with your agreement, I propose to take as read. If anyone wishes to object, please raise your hand now. Excellent, so thank you. I propose to move the ordinary business set out in the notice of meeting for all the resolutions to be moved today to vote by poll. I hereby demand a poll on behalf of myself as chairman, in accordance with Article 61 of the Company's Articles of Association. Votes cast will, for the purpose of a poll, include votes cast by proxy. It's my intention as the holder of a number of proxies, in respect of which no direction has been given, the votes the shares represented by such proxies in favour of each of the resolutions in the event of the poll. Votes by proxy, I do apologise, there's quite a lot here to read out. Vote by proxy, discretionary votes and abstentees are shown on the screen behind me in due course for all the resolutions. A poll has been validly demanded, and accordingly I ask our representative from Neville Registrars, which are there, to conduct the poll and act as scrutineers. Resolutions 1 to 11 inclusive are proposed as ordinary resolutions and require a simple majority to be passed. Resolutions 12 and 13 are proposed as special resolutions, which to be passed require a majority of 75% to vote in favour of the resolution. I now put to the resolutions to the meeting and ask those of you voting by polling paper to ensure that your names of members you are representing are clearly shown on the polling paper, which will be handed to you, and indicate by signing in the appropriate box where you vote for or against the respective resolution. Please then hand your polling paper to a representative from the scrutineers, who will then collect them. Said chap. In case of joint holders, would members or proxies represented members please write the name of other joint holders on the polling paper. I should add that any shareholder present who had submitted proxies by post, who would not wish to alter their vote need not vote in person. Indeed, it will make the vote count simpler if those shareholders who have already submitted proxies refrain from voting by polling paper. Will those shareholders requiring polling papers hold up their hands? Any more? Is that okay? So the polling papers will now be processed. It will take some time to complete the counting of the votes, so I'll proceed with the remainder of the business. of the meeting. The results of the poll will be announced as soon as it is known, but probably after the presentation in practice. The executive will now give a presentation highlighting the key events of 2021 and more recently with a view to updating shareholders and answering a number of questions that we have received in advance of the meeting. Once we've finished the presentation, we will further address some key themes covering off several of the questions received. And of course, we'll have questions from the floor after that. So without further ado, can I hand over to Alexandra, who will kick off the presentation?
Yes. Great, thank you for being there. We know that there are difficult times, and so we think that it's great to see in person the first AGM, the management team, the executive directors, the new directors, Albert, the Origination, our new chair, as you know. And so I think that today is an opportunity also to see our progress, comment the last annual report figures, and also see the direction that we want to follow, because we continue to see opportunities and we have a clear view on how we can create value for the company and for the shareholders. And so today is an opportunity to present what we are doing and our view. So this is a slide, a very simple slide that we are using also with our investors, partners, in order to summarize in one slide, Supply Me. We started in 2020. We did a lot in 2020. We follow also the approach to test and learn. And in 21, we managed our first M&A deal with Treflow. And we also improved the clarification of the business model and our basically revenue streams, including the white labeling. And also we improve our management team. So I'm very proud to have this team now in the company, in the group, are best in class. We selected the best in class, and we continue to work and have the mindset to be the best in class in the market. So basically, this is what we think that this slide can summarize our group. If we want to move in the interest of time, Shanice, if you change slide, please. The background is very easy. We continue to see now a long list of red in our screen in the market. Unfortunately, a lot of companies are suffering the economic environment, because actually it's not only a question of an intrinsic risk of a specific business, but the economic environment is very risky. This is when I found Supply Me, and I worked on Supply Me. I didn't think about COVID, obviously, but now it's clear that Supply Me and also Treflow, we are seeing great opportunities, but on the other hand, we can see also companies that are not ready to manage the risk. And so is again a question, a point to match the offering of our services, the appetite of the investors with the companies that both in the warehouse goods monetization or in transit basically needs to be supported. And then the increase of inventories is now a leitmotiv in every supply chain. If you move the other slide, please. Risk management is the key, and also liquidity is the key. And you will understand also in the following slides that technically is now a question to align the appetite of investors. And you saw recently the announcement that we made Tuesday regarding the V-Chain Alliance, that there is a dedicated slide, so we can discuss and comment together better the pros of this alliance. But the point is it's very simple. Companies need liquidity. CFO need to reshape their approach to manage the liquidity. They are finding new alternative solutions. Banks are not able to support companies. This is the reality, and not dreams, but reality. And the space of alternative asset management plus the digital asset space is only the space where companies, also large corporates, should start to discuss really in order to work as a partner, not as a supplier and client. And this is our space, is what we invested in order to improve the technology, the trade flow acquisition, the view to work now also in the digital asset space, because the demand is as usual is important. On the other hand, our mission is to find the right match trade-off between demand and the offering of capital to deploy. Is a paradox, but there is a lot of liquidity in the market, despite this moment where there is strong sell in every for every index of share price or shares, but actually there is a lot of liquidity to deploy. Please, Janice, if you want to move. Okay, this is one of the most important slides of this today presentation. We use also this slide maybe with other different colors in the annual report, but it's very important because all the questions that you raised correctly, and you know that I'm happy to reply when I can via LinkedIn, via my direct email. I'm no problem to reply, but I'm focused to try to explain better the business model, and this is also a good way to understand the delays in inventory monetization. I give you also today, without passing any price-sensitive information, but I give you more color about the background and what happened in order to explain, what we are doing. Now, following the announcement of the last August regarding the trading update and the launch of the Global Inventory Fund, you know that basically you can see at the bottom of the client, the corporates in every jurisdiction, Italy, UK, UAE. We are looking at, thanks to the Nickel activities, companies in every jurisdiction, basically. You know that our model is a commercial model. We are not lenders, just to clarify again. And the crucial role is that the stock companies, so the box in gray, that is a commercial counterparty of the corporates. This creates a lot of interest of a lot of stakeholders or subjects that are very keen to understand this model, including FRC, that basically said, okay, this is new, a new model. It seems financing, okay, but it's not financing because we work it since 2015, actually, in regarding this. It's normal. This is not like other facility that tends to say that are managing the inventory, but in reality are lenders. We are working on this model. This model technically needs a stock company that buy an inventory monetize. I will be, I know that we have a few minutes, but the key point is that we introduce this Global Inventory Fund that is the fund that will take the first risk of each transaction, okay? This was the first concern that in 2020, when Storm Harbor, a contract still in place, just to be clear, so Storm Harbor is still in place, is working with the company. But when Storm Harbor pitched this model without the Global Inventory Fund to 87 investors, Blackstone, Carval, KKR, Insight, JP Morgan, Goldman Sachs, all the best in class, okay? The key concern of the investors was two. Firstly, in the past, the Global Inventory Fund was not there, and so the equity piece, the first line, or first loss, was these funds asked to supplement to our balance sheet to cover basically this first loss, and we refused because our mission is not to be a lender. Our mission is to charge fees and to scale these fees. So we refused. Second problem was the stock company was under our balance sheet, and Amy was not happy, okay? And so actually the point is that we segregated the stock company into a fund in order to allow to segregate the funding structure from our balance sheet, our market positioning to be a fintech. You know, the fintech has bigger multiples compared to financial services. If you know an example, I know that a couple of shareholders say you are, fanatic of Funding Circle, but actually, if you see Funding Circle, I'm not referring Funding Circle, when started the initiative and decided to use their balance sheet to cover the equity of each transaction, the price go down to 400 to 8. Because the market say, okay, you are a bank, you are not longer a fintech, okay? So actually we working on this, and this new structure that we launched in last August is very, very helpful, because now when Nicola, Stuart, Mark, me, we pitch the investment opportunity to investors, they agree the structure. They say, okay, this is fine. It's a new asset class, but now the two main concern, banker upstream remote of the stock companies plus the equity line, is in place. And this for us is very, very important in order to ensure, to start the monetization. So this is in briefly, I'm sorry, I invested a couple of time more, but I think that where is helpful to, explain also a portion of delays. Please. This is not a news for you, for the shareholders, but we can confirm that captive, basically the monetization plus the white label and also the activity of trade floor are really a approach to diversify the business model. Is also appreciated by investors, also Venus that entered, like the model to have invest in a group where there is the monetization that basically is the big innovation, the white label that is basically how we can generate revenue as a software as a service business, to be very simple. And the third one is our angle of asset managers, okay? That is an interest angle also to manage maybe in the future through a more, attention to the regulatory Chinese walls of the asset management and the business. But actually, this is a good way to have a diversification of a business line that will follow also the demand on the market. For instance, in Italy, in the summer, we'll see the issue of the pegno non possessorio, the digital pledge regulation. This will create for sure an interest of banks to use our white label solution, because we are ready to manage this kind of regulation. This is an example. So to have in place this diversification, now I can understand that you can measure the value of this, and this is not reflected in the share price, obviously. But we are prepared to take these opportunities. We have in my room there is a wall where there is the the trigger and the milestone, and in the summer for sure you will see this opportunity regarding the white label. Okay. As I was saying, organizations are made by people, person, and I think that now we have a great team in place, also thanks to the recent improvement of the board of directors and the management team, the two non-executive that now become 3, starting by today, non-executive directors, the folks and team on trade floor in Singapore. So I know that a lot of shareholders wrote me, say, you are investing expensive salaries, how you can pay the salaries. I can also say that when Stomabru placed our investment in 2020, Carval said us, you are 12 persons, 12 guys, and say how you can manage 300 million pounds of money on securitization with 10, 12 persons. So basically, we have also to balance the fact that we are working with best in class, or we want to work with the tier 1 of investors. And so we have to balance this. Obviously, we are focused on digitalize our processes. We want to use technologies, but it's important on the other hand to have the right person, the right team. So you have to accept that the company in the first stage of its life cycle need to invest to create a team, also to change person. So the shareholders like us, we are not concerned if in the future we change, employees, we'll find new employees. We have a target. We want to be capital light, obviously. We want to use the automation. We have a strong CFO team, CFO function that is very keen to manage in the right way the numbers and the investment and the expenses. But you have to accept that the minimum investment in the technology, in the people, in the marketing, a company that has in our hands a unique product needed to do in the activity. And so the team now, I think that starting by today with the official appointment of Albert, Andrew, existing non-executive directors, Enrico Camarinelli, that now is very excited about the blockchain initiative, because you know that Enrico is also, you know, an analyst on this space and like it very well, is also an expert. The audit function with David, the CFO team, Mark Cavanaugh, that unfortunately today is not was not able to attend, that is managing the operation, Amy, Alice, and Nicola, together with the historical, you know, and Jean, Stuart, and me when we started in 2020 in UK. I think that now we have a good balance. The tech and the remuneration, as you can see, angle are important for us. The board of directors in the self-assessment of its competencies and skills is aware that the remuneration piece, the technology may be our area to improve. But now I think that we have a good balance of management team level and the board of directors. If Janice, if you want to move. There is your part, or
Yeah. This is your slide.
no, yes, this is my slide. It's a joke with Amy to manage the motion, a test that we made. So actually, the annual report highlights, yes, is my part, because actually what we did in 2021, trade flow acquisition. Why trade flow? Firstly, the inventory end-to-end, you know, approach. You saw the DP World transaction. This is an example where basically a company that has inventory and moved inventory can be monetized using also trade flow, the framework of trade flow, to be clear. In addition, trade flow was very helpful, strategically helpful for, you know, the global inventory fund, because trade flow is the investment advisory company also of the global inventory fund. So the question of the investors, Alessandro, you are non expert in asset management. Yes, it's true, but we have a trade flow that has 3 years of track record, zero default. Tom and John are great skills and capabilities in managing this, you know, type of asset class. And so actually, this is the reason of trade flow acquisition. We start in the end of 2020, we land in 21. We work together, and now we are working together also to, you know, manage well this configuration. So actually, this is the reason of trade flow. The second point is related to the funding. As I was saying, you have to accept that the company needs to invest in their activities, in their operations. We have to accept that basically each investor, each funder has its risk appetite. So Negma, Mercato, this type of providers has a short-term appetite. Venus has another appetite, okay? And so we try to use the right, basically the right providers in the right moment, also to take opportunities that I think that we was able to take. The capital enhancement plan, we worked with Venus Capital, the UBO, the beneficial owner of Venus is public. Luxembourg, despite someone think that Luxembourg is a blind country, is the only country where the UBO you can download from the company report. So actually, you can see, you know, the man behind, and you can see also the approach and the view that Venus is now managing with us. Also, Venus is helping with its ecosystem of funders, companies, partners, in order to allow us to monetize through the traditional route. So actually, is for us as a partner. Is not just you know, an investor into the equity with a view to see an increase of the share price. I can't say what is the expectation of Venus in the share price, but I can ensure that they have you know, a big expectation of the share price. And this is the reason, because they invested before the annual report. Okay, this is risky if you can see, you know, also this angle. Okay, what we have learned. I think that what we are continuing to learn is that there is a big interest of our facility. And so we have to be aware that in the future, and now we have a lot of, requests to understand the business model, like what happened with the FRC. We reported this in our basically annual report, and thanks to the activities of the audit committee, Amy, David, we manage the relationship well with also Jim when was the previous our chair. We manage well the opportunity to describe the model with that is a commercial model. So it's normal that when we launch something new, the typical human person said, okay, I tend to compare this with something that I know. And in the market, there is a lot of players that are trying to do something, Taulia, Apollo, but basically are lenders. If you see the financial, accounts, the point is are product financing arrangement facilities that actually are financing, okay? And they say, I'm monetizing eventually. It's totally not true. And so differently, we are working on this commercial angle. And the buzzword that we wrote in the RNS of Buchain, as Tom Winfried said, okay, in our long list, basically differently are real basically project streams. The marketplace, the B2B marketplace, for instance, is another way to enhance the fact that we are managing a commercial model where the companies will sell the inventory to us, because in the future we'll allow this company to sell the inventory to third parties. And no one can say you are the lenders, because no one lenders is improving in the B2B marketplace, for instance. Okay, this is an example of what we want to do, but we will explain better also in the future. So we are conscious that we need to invest time to these very interested people that want to see how we are working, how basically the technology will work, the commercial contracts that are IP rights. You see a lot of investment also in our basically intangibles, and a big portion are legal and accounting investments. Good.
Right, the rest of the team, you've got 5 seconds.
Yeah.
I think next one is for Amy.
Yeah. Right. Thanks, Alessandro. So good morning, everyone. I'm just going to cover some of the key points from the group's consolidated financial statements. So probably a bit more dry than Alessandro's bit. Hopefully, you've all had a chance to kind of read and digest our 2021 annual report, which has got the full details of the financial statements and also the accompanying financial review. So this slide here pulls out some of our sort of key financial KPIs that are highlighted in the annual report. I guess the key ones I'm just going to read off the slide would be the total revenue of $500,000. We had an operating loss in the year of 10.8 million. We had total assets of 10.6 million and net liabilities of 1.4 million as at 31st of December. So Shanice, would you mind to move to the next slide? So as we've discussed in the annual report, 2021 was really a year for us to invest heavily in the business. And this, along with the delays that we saw in the revenue generation, have led to the losses that were on the previous slide. So what have we been investing heavily in? We've been focusing on refining and developing the business model. That includes upgrading and refining the architecture, IP, and all of the other bits around our innovative inventory monetization platform. We've been focused on building solid internal controls and governance processes, and that includes building out the management team that Alessandro spoke about. And we completed the acquisition of Tradeflow, which obviously brought transaction costs. We also had integration activities, and then there's also post-acquisition earn-out payments that came with that acquisition as well. So in addition to the sort of heavy investment, the losses were further increased at year end by 2.6 million as a result of some impairment charges that the board prudently decided should be recorded. And this followed specific impairment assessments that we needed to do in accordance with IFRS in relation to our inventory monetization platform and also the balance of Tradeflow goodwill that we had on our balance sheet. The impairment charges acknowledge the uncertainties that surround the group's forecast at the moment, particularly with respect to the delays that we've seen in the revenue generation and the lack of historical track record of a number of the revenue streams. It also reflects the scale-up nature of trade flow. They obviously have a 3-year track record, but they're still growing. The board remains hopeful that these impairment charges will subsequently be reversed in future years as the business becomes fully operational and we start to demonstrate a track record of revenue growth and profitability. The final point on this slide that I just wanted to touch on was around the going concern basis on which the group's financial statements have been prepared. So in making the going concern assessment, the directors continue to conclude that there were material uncertainties in this assessment, particularly with respect to timing of the initial and ongoing inventory monetisation revenue streams, for which we have seen delays to date. Additionally, specific future cash flows resulting from our new capital enhancement plan are subject to approval of certain resolutions at today's meeting, which you couldn't take as a given. So Shanice, would you mind to move to the next slide? I just wanted to kind of finally touch on sort of 2 key areas that have particularly impacted our financial statements in 2021. The first of these, as we've already touched on, was the acquisition of Trade Flow, which we completed in July 2021. This was an important milestone, as Alessandro has already touched on. It allowed the group the opportunity to provide the end-to-end inventory monetisation journey, also allowed us to expand our global footprint and customer base. The initial accounting consideration that we recognised in our financial statements for this transaction was 7.1 million. That related to a 4 million cash payment and then 3.1 million equity consideration. Additionally, there's a number of future earn-out payments which relate to future years, and they are accounted for as a charge to the income statement in that relevant period. In FY21, we recognised 1.4 million in relation to these payments. As a result of the acquisition, we recognised 6.9 million of new intangible assets on our balance sheet. The largest of these related to the Trade Flow customer relationships of 4.8 million. Goodwill was also recognised on the balance sheet, and the carrying value of this following the impairment at year end is 1.6 million. The second area that I wanted to touch on was the funding facilities utilised by the group during the year. I'm sure you're all familiar with these, and Alessandro has touched on them earlier. These facilities were required to support the group's business model development and also the platform development. They also were required to support the acquisition of Trade Flow and our general working capital requirements. The facilities included the Nigma convertible loan notes and also the Makata financing. During the year, the group received net cash inflows from these financing facilities of 11.6 million. And at 31st of December 2021, there was 5.7 million remaining to be repaid. This followed cash repayments of 2 million and a further 4.5 that had been settled via the issue of convertible loan notes. The cost of these funding facilities during the year was 1.2 million, and this was recorded in the finance cost line in our financial statements. As the group moves to its next stage of development, we've entered into our new capital enhancement plan, which Alessandro has also spoken about, and this is with our new long-term investor, Venus Capital, and we're hoping that this will provide the commercial and financial support that we need for our next phase. There's certain resolutions that you've all been asked to vote on today that are connected with this plan, and that will enable the group to issue further shares to Venus Capital and also to existing shareholders, as we hope to kind of move to a more optimal combination of institutional versus retail shareholders. And further information on these activities will be available in the coming weeks. So the next slide, Shanice, focuses on operational KPIs. So I'm just going to hand over to Tom to touch on the in-transit KPI.
Thank you very much, Amy. So yes, hello everyone. So today, in terms of the in-transit monetisation, we've had some very good growth here in 2022. In terms of net inflows, we managed to increase AUM still last year. And certainly the Euro Fund has been doing very well this year. I think basically talking to certainly institutional and multifamily offices, there's a lot of dry powder out there. 30-40% of them are holding still cash because of the fear in the equities and other asset classes. So very positive in terms of continued growth this year. And certainly Q2, we've already seen some good increase, which we'll be able to report shortly. So it's looking very good. We're seeing that a lot more people are still post-COVID wanting to hold more and more inventory. So moving from that just-in-time to the just-in-case model. And certainly, we were able to report a few weeks ago that we did our first transit monetization into also UAE Jebel Ali port there, which also then led into warehouse storage as well, which Nicola will touch upon in a moment there as well. We're certainly seeing the removal of travel restrictions helping the completion of due diligence by investors as well. So that's also contributing very nicely to a conclusion of new investors coming into the fund. So yeah, very, very positive for the second half of this year as well. Thank you.
Okay, and I think, Nicola, can we hand over to you to talk about the warehouse goods KPI?
Yeah, definitely. Thanks, Tom. Good morning, everyone. As Amy just mentioned, I'll focus on the warehouse goods pipeline that we mentioned of 164.8 million that was included in the annual report. It's clear that we have a huge target market, and when the backdrop of supply chain issues and as government support for COVID support runs off, we're in a good position to help potential clients facilitate the move from just in time to just in case, as Tom mentioned, to support their working capital needs and unlock the cash that they have, the liquidity tied up in their inventory. Since joining in September 2021, the team and I have really focused both on refining our origination process and growing our ecosystem to ensure that it's a sustainable pipeline and the origination process is all the way through to onboarding and client retention. Regarding the ecosystem, the team have spoken to nearly 200 potential originators, from banks to asset-based lenders, accountants, brokers, other asset-based platforms, in order to introduce Supply Me Capital and initiate referrals and introductions of new client companies. We're now seeing a steady flow of these referrals, as well as targeting companies in the UK and Italy directly that meet our key criteria. We expect this flow to grow again significantly post the first IM and when we can initiate more targeted marketing. There's plenty more work to do in this in regard to this area to facilitate new pipeline and to grow the team to ensure that we can cater for that growing demand and provide the right customer experience. We have to ensure retention of those client companies going forward. Our key origination process involves an initial pre-screening to ensure the potential client company meets key criteria using publicly available information. And we have potentially billions of inventories being monetized at that level, which reflects the figures that were presented historically. The target client's inventory to be monetized includes, at the initial introduction pre-screening stage, all of the inventory in their financial statements, but this decreases as we move through our process. We might discuss with the company that they only want to monetize a portion of their inventory. It might be raw materials, it might be finished goods, or it might be a mix of both. They might decide to start with one jurisdiction or one warehouse or a specific set of SKUs. Then through the due diligence process, we analyse and agree with the client company which of the inventory is to monetize. So as you can imagine, we might start with IM potential of say 100 million, but by the time we've gone through our processes, we might end up with say 20 million to be agreed through the commercial contracts. Therefore, the pipeline we're focusing on today is where we've got a significant dialogue, and having moved through our process is where we have a more accurate figure of what we can potentially monetize. The figure fluctuates, as you can imagine, as new clients are introduced, and move further through the process, and conversely, in some cases, are marked as lost due to feasibility of the structure. It might be a timing issue, or it might be a change in the strategic direction of the client. The pipeline isn't a reflection of the amount of revenue to be generated, and it also doesn't reflect the total value of client companies that we're in conversation with at early stages at the moment, or on companies that are on hold and looking to be revisited after the first IM. So despite that, we think it's a good pipeline KPI to provide a good indicator for the level of demand for the group's warehouse goods from a monetisation services perspective. That's me.
And now I think it's over to Alice.
Morning, everyone. So a number of the resolutions today relate to remuneration. So we want to talk a bit more about the structure of remuneration as detailed in the annual report. The goal of the group's remuneration policy is to ensure we attract and retain the right talent for the group's future success in the competitive market. We've talked a little already about the skills that are required and that we've grown within the management team, and it's important that we continue to build and retain the team at the right level. There are two broad categories of remuneration: fixed, what people receive consistently; variable, elements which change based on performance. In 2021, there was no variable pay, and our directors' remuneration package is below market based on external benchmarking. In 2022, the CEO's salary was adjusted to be more aligned with the other executive directors, and also his pension contributions were reduced to align with the majority of the workforce, so from 15% to 6%. We're seeking approval for the introduction of a long-term incentive plan. This is a component of variable remuneration to further align shareholders' interests, the team and business goals in the long term based on the current market position. Any awards that would be issued this year would vest in 2025, with executive directors having to hold their share awards till 2027. The aim of this is to retain our talent and reward them for long-term business performance. Approval of the remuneration policy enables a bonus structure to be developed in future years, although the Remuneration Committee have already concluded there should be no director bonuses for year-end 2022. The Remuneration Committee annually considers compensation to ensure we're competing for and retaining the right talent. They take into consideration the market environment, pay and benefits across the group, individual and company performance, and remuneration policy guidelines. From 2023 onwards, in addition to the annual assessment of fixed pay, they will also consider if a bonus is appropriate and at what level, based on the policy guidelines, individual and company performance, LTIP award levels and the population, ensuring market appropriate performance targets. On that note, I'm going to hand over to Stuart to cover risk and governance.
Okay, thank you, Alice. Good morning, everybody. There are 3 slides to follow that speak to risk and governance. Now, I don't propose to go through them in any material detail. I'm also very conscious of time. Rather, the message that I'd like to leave you with is that we are not blind to risk, far from it. That's what I do for a living. So what I wanted to do is to set out the key risks we've identified, but most importantly, the mitigants that we believe we have in place to address those. So we acknowledge, for example, the strategic landscape, which we'll come on to in more detail towards the end of the presentation, but believe we're in a position where we can more nimbly adapt to market circumstances, given that we are at the start of what we hope will be a very long journey. Similarly, as you'll see set out, we acknowledge there are funding risks. Alessandra and Amy have both respectively talked to that, but we have spent 2 years now, over 2 years, building out a network we can believe we can tap into. Equity dilution risk is noted. Again, we've spoken to that earlier in the presentation, but needless to say, we're trying to find the best outcome for our shareholders. Alice has just touched upon employee incentivization. So I won't return to that. In respect of business continuity, as with any responsible business, we have BCP in place. In respect of data protection, we can move on. Thank you. We're engaged with a third-party provider to ensure that we are compliant with GDPR and the 2018 UK implementation thereof. And as a final point, and as discussed very extensively within the annual report, we endeavour to ensure we are compliant with the QCA code. So that's a very quick run through of risk and governance. Clearly, we'll take questions later as needed, but that concludes my section. I'll pass you back to Alessandro for strategic overview.
You can finish off in your nice little succinct.
How many seconds I have?
You've got 2.5 seconds.
So that's the last part of the presentation. Since also we want to give to the shareholders a color also regarding our strategic direction, since we know that we received a lot of questions regarding the strategic plan, basically what the company wants to do in the future. So this slide we can move very quick because this is only an interesting point. When an investor select a company to invest, wants to see the target addressable market. And the target addressable market is important, as we know. But the key point, if you want to move the second slide, please, Chinese, is what are the players in the field that can cover this very important target addressable market? Because the receivables business, you know that in 2014-15, a lot of fintech platforms started the initiative focus on receivables. But the receivables part is finishing. So actually, there is a lot of platform, few names. The opposite, as you also that you selected, cherry pick, Paul, Matthew, all the investors that basically I'm in contact during day by day, basically cherry pick initiatives. And this is a slide that we prepared in order to explain that. As I was saying, a lot of players are delivering a product financing arrangement. Apollo Alliant, you can see, at the bottom, that basically are purchasing or funding vehicles to, purchase inventory, but at the end of the day, the buyer has to buy back the inventory. So it's a recourse structure, it's financing. Taulia, SAP, they are trying to do something on inventory because the receivable business is not easy. Demica started initially with an approach to have also an arranging function. Then they are working on with big banks just to provide software. In the middle, we are trying to cover an untapped market that is made by buyer side that has inventory. They need to monetize the inventory. They don't want to get a loan. They don't want to get a debt in their balance sheet. And we are trying, and we want to cover this very huge space. Okay, and we are investing a lot of time. It's true. We invested time, we invested in resources, but the space also recently, a couple of investors or analysts said you are covering something that is not covered by no one, basically. And so I can understand that you are trying to invest time to educate investors, to maybe fine-tune the model. And another very important point that our target are mid-cap, small, medium enterprise, are not large corporates. And this is another big difference between compared to Apollo, Taulia, Falcon, similar players. So this is I think an helpful pitch to understand our market positioning. Finally, last two slides, the future of the platform. The platform, I remember a lot of questions when we announced the creation of Supplemit Technologies. a lot of questions. They think that we wanted to spin off the company, to sell back to something particular. Actually, is only way to segregate the value of the technology with the value of the analyst, and with the fact that typically the partners that want to use our components prefer to have as a counterparty a technology business. And these supplement technologies for us will be the hub in order to deliver this framework. The framework is that we can use our unique product in the left, so the monetization, leveraging our funds, so the global inventory fund, leveraging third-party funders, debt fund, asset manager, the digital asset, the crypto, and working, at the right also with the local commercial banks that maybe they want also to use our platform to, plain vanilla inventory transactions. For us, will be revenue, and for a bank, maybe a first step to, come into our space of the monetization. In this speech, we are continuing to think about the role of the captive bank. Okay, that just to spend 30 seconds, because there is a two big question: captive banks, Sto Marble, so we try now to manage these. Firstly, the captive bank is a project where the equity will be basically managed not directly by Supplemì, as you know, in the announcement of September 2020, and then in December with the role of Quadrivio. So Supplemì will not invest in the equity of the captive bank. Supplemì will be a partner of the captive bank. This is very important to understand. Obviously, the role of the captive bank in the last 2 years has changed because the external factors, the opportunities to work with such a third point in the list of the questions that correctly you raised. Actually, the configuration of the role of the captive bank changed. This is the reason that we are discussing how to integrate the captive bank in our business model, in order to avoid to be, to lost opportunities to work without the captive bank, because there are funders that say, I want to invest directly without basically no one together with me. And so we are now designing the right strategy to use the captive bank route, okay? The Sto Marble is a role that on top that basically is wants to provide investors. And when Sto Marble understood also the change of our strategy, introducing the global inventory fund, they start again to ask us to continue to place, because it's true that in last year we started to work also without Sto Marble. Is obviously, if you want the performance, we assessed that basically the opportunity to work also on a standalone basis. We start to work also directly to have a direct conversation with investors. But Sto Marble also recently, and Stuart can appreciate the activities of Sto Marble, that basically is very keen to originate investors. Also because talking with a couple of important asset managers, it seems that they are moving from receivable space to other new asset class really now, because they have a lot of capital to deploy and they need new investment opportunities. So is the reason because I was saying the receivable part is finishing, because it's not easy to find receivables. The insurer are three that are trying to insure all the receivables in the space, and so is not basically a limited market. Crypto funding, the crypto, maybe we can use the last slide, and I try also to reply to a couple of questions. Firstly, we said in the RNS that the so awaited first IM will be delivered by end of July, we wrote. So an expectation, or I saw now also the questions in the chat regarding when you monetize, you do the first one. We announced Tuesday that basically we will do this. Regardless the type of funding, at the end of the day, the typical question you have to deliver, okay? You have to deliver the first one, to leverage the first one, to avoid detractors that will say, yes, but it's only a concept, it's only an idea, and so on and so forth. This is a big opportunity for our company. There is a lot of excitement in the management team. Mark, Stuart, Myro, all the guys are very, very excited. For us, it was basically a big event, because basically we know that now we have a calendar, a diary, and we can monetize the first company that are revenues, to be clear. It's not a fancy transaction for marketing, are real revenues. And we want to see when we announce the delivery of this first one, we want to check also the performance of this transaction, and in order to allow basically to also analyze this kind of funding route. Okay, so it's important, this first message. Second message is the digital asset space, the opportunity to leverage the digital assets. JP Morgan recently, a lot of DeFi protocols, the funds are looking to invest into digital assets. So for us, it will be an opportunity. Also to scale the rapidity, the velocity, the decision process, and so on. On the other hand, the traditional funding route is in place. It's not true. I wrote a message that say, okay, now we have to wait December, then you start the traditional funding route. This is not true. The day-by-day role of Nicola in particular is to work with funders to package portfolios and to try as soon as possible to monetize UK, Italy, Middle East, also leveraging the Sharia role of Intesa Sanpaolo. So actually, the traditional funding route continue. But the key message that I want to pass today is that the first IM, we have finally a date. The model will be definitely confirmed with the traditional, original idea. So it's not nothing that we try to change in order to deliver. The company is a real company. There is a real true sale. So all these key messages are true, and we wanted to also explain when we'll execute this transaction. So this is what is important to leave and pass it to our shareholders, to the market. Monday, I will have an interview in order to try to explain these in the right manner, and we want to basically to confirm that the first IM finally we see the goal so expected.
Well, thank you, team. So obviously, I think just to reiterate, that first step, that first IM, I think is absolutely key for us to prove out. And once that's done, we can then scale that up and build the company. So if I hand over to Nick, who's going to just summarise some of the questions that we've received online before we go to yourselves in the room.
Great, thank you, David. We'll now turn to the Q&A session. We've had a large volume of questions submitted in advance of today's meeting via the Investor Meet platform, and have also had several questions submitted during the course of the AGM presentation. Due to time constraints, it will not be possible to answer all of them during the session. However, over the course of the next week or so, the list of questions together with the company's responses will be published on the Investor Meet platform. All attendees of today's meeting registered to receive information on Supply@Me with Investor Meet platform will receive the email notification of Q&As when they are available, with the caveat that there may be some submitted questions that the board is not in a position to answer directly as a result of them being either commercially or price sensitive. However, it will endeavour to answer as many as possible. The team will now, in the time available, address selected questions covering the five most popular occurring themes, following which we will take questions from the floor. And first question, can you explain in more detail the delays in achieving the first IM? It is understandable that COVID has played a big part, but what else has affected progress, and when is the first IM expected to happen?
Thank you. I summarize what we said in the presentation. The reason of delays are related to the model. I explained the first loss, the segregation of the stock companies, the expectation of the investors to have a segregated funding structure, okay? And when just to also add at this point, in between December 2020 and January 21, actually with Somarburg, we were working with a real funder with a real portfolio of 300 million of euros, 30 companies. I remember all the works that we made with this funder at Somarburg to manage all the stock company, business continuity, all the operation. And then what happened? Happened that these funders changed idea regarding the appetite for Italy, because unfortunately we had only 30 companies in Italy. The funder is public, was Carval, just to clarify any gossip or other basically names. And technically, this is what happened. So the excitement that we had in January was a genuine excitement, because actually we were working to finalize this transaction, and we continue to be excited. You can see my face, my passion, and technically, and we will continue to do this. The first IM I replied earlier. We announced on Tuesday that our plan is to deliver the first IM by end of July.
Thank you. Second question, given recent news that WeTrade and other platforms have either gone bust or have filed for insolvency, how is the company preparing to navigate what may be a risk-averse time for investors and attract much-needed investment? Furthermore, there has been huge dilution over the past 18 months thanks to successive debt conversion funding, with further dilution to come via the open offer and warrants. When is the group going to start making decent revenue and fulfilling their goal of actually servicing clients?
This is a package of questions, basically. So just to distinguish, I had the opportunity to exchange a point of view regarding the default of WeTrade or other solutions or other business in the market. Actually, these initiatives are software in a market where there is a lot of competition, with expectation to work with a club deal of banks, and so is a totally different initiatives than our product, our view. So I think that is not correct to compare WeTrade or other business with our company. On the other hand, we have a direction that I think that is clear. So we have a portfolio of clients that we want to monetize. We are finalizing the traditional funding routes. We have the crypto funding routes ready. So the expectation to generate revenue is concrete. And all the directors and the management team is working with the best effort to try to improve revenue, to be efficient, and to continue to this phase of scaling. And so we think that finally, with the first monetization, as always we said, we think that also the appetite of other investors to invest in the model will increase, because they see the first one. We can use the first one to explain how it works in reality. That the financial market is made of followers. And so this first one is important also to pitch this, and accordingly, we can expect for sure an increase of revenues.
I think just to add, in terms of jurisdictions, clearly, accounting-wise, IFRS, and we talked about, and there's some questions there that we need to prove it out in the different countries and make sure each country is happy with that, the way of accounting. So again, we propagate through Europe all our deals, and of course the first one, jurisdiction-wise, I don't know where that would be, but you'll see that proof of concept going on throughout Europe and wider afield.
Great, thank you. Question 3. At one point, the company was worth more than £300 million. It's now worth less than 30 million. What happened and why?
The $1 million questions regarding the markets in this moment, because actually every day, all the shares, all the markets, unfortunately, in this moment, it's better to not see the screen. This is our view as obviously directors can't work on the share price directly. We can work on the underlying, the business, to promote the business, to work with the right partners. And we are sure that if we deliver this, we work with quality partners, we generate revenue, technically is the direction to increase, to recover the share price will be achieved. We needed to work on the best in class, as I was saying. We needed to work with, to invest the right time in the right streams and not to waste time maybe in other initiatives. And on the other hand, this moment the markets are not very, there is a bigger turbulence, and so we have to be calm and to see the restoring of the economic environment. Yesterday, I was speaking with Albert, and we said, the inflation rate this year 10%, next year it seems that it will be better. And so hopefully this is the outlook that we are going to target. And for sure, this will help also a recovery of the share price, not only our company, but all the companies that are listed that are very, now is a very not a great moment to see the market cap of a company.
Thank you. How can such a large remuneration package for the CEO be justified when the company is still struggling financially?
That's a question for me. So as I mentioned earlier, we benchmark pay to the market. So our CEO salary is benchmarked to the market, and it's currently below market rate, especially when you consider the limited nature of the variable compensation in relation to it as well, which we think represents the current landscape. And you can see some of the decisions that have been taken by the Remuneration Committee around this year's compensation to continue to ensure that's correct. So we are currently comfortable with the current level of compensation being appropriate, and that it demonstrates a commitment to making sure that we're retaining and rewarding our team.
Thank you. A final one for me here. Why are you not updating the market and shareholders more frequently? This includes updates on initiatives that have either failed or at best not yet succeeded, e.g. the captive bank, the fintech bank, the 12 funders, Storm Harbour. There is an information vacuum on these initiatives and more. Also, when will the website be more regularly updated? Some of the information is out of date, incorrect or insufficient.
Yeah, let me take that. I think we acknowledge that some of the announcements that we have made have not been followed up as frequently as we might have wanted to. I think the key message I would want to leave you with, though, is that, as Alessandra alluded to, for example, Storm Harbour, Captive Bank, is that these are still live work streams. They're just at different inflection points as to where we thought they might otherwise have been. A lot of market that we would like to present, we cannot, because it's either commercially or regulatory price sensitive. In respect of the website, we are currently undergoing an initiative to try and make it a more rounded portal, so it can be used more efficiently by both shareholders but by clients as their inward portal to our product. Clearly that comes at a cost, so Amy shouts at me whenever I put a budget in front of her. So we're trying to work as smartly, as efficiently as possible. David?
Right, thank you. What I'll do now, I think, is open up to the room. There's going to be a couple of questions online which I'll interject. I would like to, if we can, and I know this is, everyone's been waiting for this particular point in time. We'll talk about a subject, but we won't go into too much detail and too much repetitive questions around it, just so we can all have a question if you want that. So, shall we start with anyone put their hand up and we'll kick off? If you could just introduce yourself and
yeah, it's Steve Enright. Just for clarification, your relationship with, our relationship with Venus, you've described as an investor with a powerful ecosystem of investors. So effectively, are Venus acting as a funding arranger?
Yeah, no, actually, Venus has two roles. is an arranger, but also an investor, basically. So as you know that in the investment industry, you arrange the investment process, investment pool, and then you invest directly with the balance sheet, plus you have a sort of group of investors that could invest. And so it's great to have a combination of these 2-3 roles, not only an investor, not only an arranger, and not only a commercial partner that they don't risk its balance sheet. So there is a big skin in the game of Venus in our initiative.
Next question. Don't be shy.
Hi, my name's Vaughan Pullen. Yeah, I'd like to know, on the 31st of December in the RNS, you stipulated that you were almost ready to do the deal with the financial bank and that you're in the final stages. You're also in the final stages of the IM for Italy.
Yeah.
Could you tell me, when you go in to close the deals, what are the funders actually saying is the reason they don't want to invest?
The reason to don't invest, actually, just to clarify our process, the process is a standard process that now Nicola is managing for a multiple of streams, as we wrote in the annual report. What happened? We pitched the investment opportunity to an investor. Then we signed an NDA. Then the investor started due diligence. Then at a certain moment, investors see the clients, okay, and try to cherry pick the clients, and then finally they try to negotiate the key terms, the economic terms. So can happen that an investors want to see like all, but then the underlying is not good, like we have with the Storm Harbor and Carval in January 21, or happen that the process take time because we negotiated the economic conditions. It's important to balance the fact that we can't ask to the client a higher price. The risk is to create a problem and then customer in order to satisfy a funder. So basically, it's a negotiation process that can take time. And also can happen that in a certain moment, the investor or we are not interested to work with an investor. They want to charge 10% and take all the securities because it's not fair. For our mission, we want to help companies, to be clear. We are, in the part of the real economy to support companies. This is our mission. And so it can happen that we refuse also opportunities because are too expensive, basically.
Right. I have one final question. Obviously, the stock holding companies are SPVs, are they?
Are trading companies, are not.
So they're going to be
SPV.
Companies, effectively.
Yeah.
So the funders, will they then need to almost take ownership of that stock holding company? And therefore, what I wonder, do you require a bank, i.e. the captive bank or the financial bank, to allow all the money to move through?
Firstly, the stock company is not owned by the funder, the investor, because differently it will see a risk that the investor will recognize all the inventory in its balance sheet. So actually, the model should work and will work that the stock company is owned by the Global Inventory Fund, is segregated, and that investors or lenders can take the senior risk, basically the low risk in each transaction. So banks can use via SACE, for instance, in Italy, can lend the stock company and take the part of the risk that is less risky, and the equity is provided by the fund. But the stock company is not owned by the funder. Is not no investors want to own a stock company, to be clear.
But they do own the stock that they're buying.
They lend the stock company that is owner of the inventory, and they can ask a security package, so a pledge, for instance, or over the inventory. But there are not owner of inventory because are asset manager that can invest in loan, notes, or similar financial instruments.
Next question.
Hi there, I'm Sasha Yakovlevich, and thank you for the presentation. It was quite informative, actually. And also a little word for you, Alessandro. I think I'm liking this more tempered version. The enthusiasm's still there, but a year, 18 months ago, there's probably a bit too much information flow, but right now I think you've got the tone just about right. My question is probably more directed at the marketing side of things. We have Cicero and we have Walbrook. You know, I own several companies myself, one of which is an 8-figure computer manufacturer. And I just feel that on the marketing side of things, you might be missing a trick in terms of the PR. There doesn't seem to be an awful lot in, you know, the sort of broader mainstream press, not necessarily, you know, the tabloids or things like that, but I just mean in general, the business press. Obviously, Proactive would do a lot with them, which, you know, I don't know what the arrangement is there, whether it's a paid for arrangement or whatever. But I just feel that there's a massive marketing opportunity on the PR side of things that just isn't being tapped at all. Now, my question as a shareholder, and obviously ultimately, you know, the rest of the people in the room are shareholders, and, you know, it's our money that's invested in the company. We want to know, is our money being spent wisely with the PR companies that we currently have? And would they actually take any kind of, you know, in inverted commas, advice on board with regards to that? And one final point, as an 8-figure computer manufacturer, we've never been approached by anybody at supplying me. And yet it strikes me, because of the current supply chain issues that we're having, especially with Brexit, it's a nightmare. And, you know, importing from Europe or exporting to Europe is a pain. You know, I'd like to have a conversation with somebody regarding what we do on our supply chain.
Yeah, I think that maybe Nicola can reply.
Yes, I mean, firstly, I'm sorry that we haven't contacted you. I would love to know what the company name is, and I can go through our target list. And let's definitely catch up and follow up on that after this. But we work really, you know, we work regularly with Cicero, and we have weekly and monthly meetings with regards to the PR campaigns for, you know, specifically the UK, but also the Italian and the global market. And I agree that there is more that we can be doing. And that's for me to really push forward with the guys to ensure that we are tapping into the right media outlets to get the message across. So I think that's one for me to take away with Cicero.
Yes, also just to add another point, our approach to promote the service is for now to use this network of introducers that are very qualified introducers, so Big Four or you know, corporate finance network. And so for now, we think that this is a good way to spread. In the future, we are envisaging also to improve a portal where a company can apply, you know, the request, simulate the value of the facility, and accordingly we can be more, you know, reactive also to maybe respond to the company, and also package also a work with the business owner. So we take this point as an area of improvement, and we work on this.
Just one thing, maybe. Again, it's probably one for maybe Nicola, but there is an organisation called the National Association of Commercial Finance Brokers in the UK with over 2,000 members. They had an expo, I think, last week or the week before. Over 2,000 people there. They represent literally billions of pounds worth of you know, companies out there. So I think that would be a good opportunity to tap into their network, because they deal with SMEs. That is primarily what they do, because obviously after a certain time you will go to more sort of merchant banking route.
Yes, if I can reply a bit on this, our strategy, maybe you read the last words of the last RNS that we published, when we said that we want to use the funds provided by VuChain also to monetize a UK company. If you remember the last sentence of the RNS, our strategy is to monetize a UK company, to prove also UK, as also David was saying, the monetization, and then basically to sell the service widely with also a first transaction made. Because what we Nicola was observing is that there are a good attraction. They are very interested to see the first one, and then basically to continue the due diligence process, because this is a typical day-by-day discussion that we have with Nicola. There's a long list of companies, but then, as I was saying, we want to invest to be concrete. And so I think that we'll land in this type of approach, maybe also leveraging these networks, following a first announcement of a first monetization UK. I think that it will be more effective.
Okay. Can I'll ask a question from online. This is for Tom. Tom, congratulations on the initial transaction carried out in the UAE. How do you see this initial proof of concept transaction developing with Cargo's DP World now?
Yeah, I'd first say I don't know if it's a proof of concept. I mean, it was a proper deal, and we've now got every single day we're now getting some new inquiries coming through the DP Cargo system. So we're actually going through some due diligence for counterparties, so expecting to have the next deals done in the near future. Certainly works very well, and their whole strategy in terms of digitization of introducing customers to us, Origination, being able to pass through some KYC data to us as well, which we're then able to double check and process in our systems, and their digitization of all of their ports and logistics. It's a great partnership, very aligned in terms of our mutual approaches and digitization. So,
thank you, Tom. Just a quick one. IFRS is something that we're constantly talking about, and I think one of the questions here is sort of asking about, will it be proven by the client's auditors, which is effectively what it will be. I think just to be, we've got advice, but ultimately the client who's got the inventory, who's getting the funding, their auditors will be signing off on the treatment under IFRS. So again, that's that proof of concept we talked about, and that's why I think an auditor in the UK, in Italy, and US may have a different view. So we need to go through and make sure that is all working from a legal perspective, but it's then reflected in an accounting perspective. I think there was another question just before. Unless that's just scrolled through. Question. This is perhaps Nicola Alessandro. How long, and this might be how long's a piece of string, is the average time period from introduction to client through onboarding and becoming an IM? There we are. Answer that one. I think we've talked about why perhaps in the past things have been delayed, but what's our kind of expectation? But we do know that we can be eroded by other matters.
Alessandro, do you want me to take that one?
Yes.
Yeah. So our process has a defined period of time to be completed, or that we can complete it for the client. But there is nothing to say how long it will take for the client to understand the process, to understand our offering, and for them to overlay that with their forecasts and their projections to see the benefits to their business going forward. So that's the bit that's, how long is a piece of string? Because, from that first conversation that I'll have with them, it is then for them to talk internally about it, to understand it fully, to potentially sell it on to their shareholders, their board, all the internal hurdles that they might need to go through. Once they have got a good understanding, then we progress to the term sheet phase, which starts our due diligence processes. And they can take, the first round could be 10 to 20 days, second round 10 to 20. So it can all move quite quickly once we get to term sheet stage. But yes, how long does it take for the corporate to sign up, essentially?
Good answer. It is a if and buts, but I think as you probably, hopefully we've said, we are learning by the past and getting better at it as we go forward. We're building a quality team here, and we continue to strive forward and you know, we're very vested in the success of the business. So is there any other questions? Chat down there.
Thank you for the presentation. Very useful. Sorry to put you on the spot, incoming chair, but I just wondered what attracted you to the role, and also what you think your biggest challenge will be.
Thank you, and good morning, everyone. So, getting on straight with the answering the question. So it's clear there's a great market opportunity for what the company is offering. There's a real need for the product. The bank regulations are facilitating the move towards the product. The technology advances is another driver of all of that. So, as you know, I spent some time working with the company as an advisor. The company has announced this, right? So, and it was a kind of a twofold process. On the one hand, I tried to assist the company thinking through what it should be planning on doing in terms of board composition, governance, funding, attracting institutional investors into the business, and how the company should think about its investment case and market communication, and learning from the past experience and kind of moving forward. So that was kind of my gift to the company as part of this relationship. But I also wanted to understand if this is an opportunity that was right for me, frankly, right? So, and this is a rather long explanation and an introduction to say that I did believe that there's a market opportunity. I wasn't sure before that the company has a solution. I was quite convinced as part of this process the company has a solution. This clearly needs to be proven, as we all know in this room. And so the proof of eating is in the pudding, and Alessandros, you know, gave certain expectations, as you saw that. So but I thought even before I knew that the company had a solution. So it's a kind of a call that one has to make. I also quite really like the team at Supply and Capital. So that was important. And I think one other point I would make is the company is relatively small to its position as a listed company. As a business, it's relatively small to its listing, if you like, or its listed company position. And I hoped, with my experience in the listed company space, where I used to run listings businesses for large exchanges, and seen tens of companies in different situations, coming from small to big and from big to small, and all sorts of issues, that I could maybe help the company navigate that part, which could be seen as an advantage. It could be seen as a drag. It's an interesting challenge. So, yeah. So all in all, I hope that gives you an idea of why I thought this would be a good match.
Just the last couple of questions, if you mind, then I'll go through the boring part of the resolutions, but I'll need to do that.
So I'm Paul Seville. Just a few questions. I've had a few questions sent to me today, some of which I won't answer. But from the first ones from Mickey. No, I'm joking. First one, can you tell us a little bit about the POC in 2018, the two clients from? Yeah. And then second question is, when do you believe the directors can start buying? I know you've been asked that so many times.
Oh, thank you, Paul. So the first question is just to recap our history of Supply.me. We started in Italy. I founded Supply.me and the Avanga Group. I founded the Avanga Group with the former head of supervisor of Bank of Italy, Professor Parente. And so we started to do the first pilots of transaction using firstly the technology, then the accounting piece, together with Banca Sella in Italy and UBI Banca. And the client was one Unieuro, the second one was in Alca Group. So basically, these are what we did. And this is the reason, because then we decide to move from a direct relationship with a single bank and their clients to the home of FinTech London, and then to spread this initiative across the jurisdictions. So this is what happened between 2017, when I remember Banca Sella wanted to buy the company. Okay, we took an offer from them, but I refused basically because we were in a very early stage situation, and we wanted to, as usual, to think big. And then we move into this very, very exciting initiative that is now to spread the initiative, regardless to work with one bank, one client. That was not very sexy, in my opinion. Direct or buy, I can't say nothing, but maybe I can leave.
The question is, when can we?
Yeah, I mean, obviously it's a grey area, and until you've done first transactions, you've got the revenues out. Technically, I'm assuming you won't be able to. Directors cannot buy at this stage until the process starts.
Or I mean, you have under MAR that restrictions anyway, closed periods, etc. So are we in a closed period? Well, technically around accounting, the audit's been done, that's been announced, but then we're going into interim stage. It's a treadmill. There are points in time where we can buy, clearly, but because there's a lot going on around first transactions and agreements being signed, it is quite a fine line as to when we can do it, because we might be deemed to have inside information. So it's not because of we're not willing to buy.
Yeah.
It's really down to we can't buy, and we wouldn't. It's important that we do buy. Clearly, that would be a good signal, but we don't want to be doing that if there is a perception there's inside information. Clearly.
I remember one time it happened that we started to think about in the past directors buy, but we invested 5 days with legal lawyers and risk manager. Yes, no, you can't, and now you can't. It's a very, very difficult situation, but actually I can agree with them. It's a risky area now.
Just one last question, if anyone's got one. I think once we've finished the formalities of the meeting, and we'll close the meeting, we will be here for tea and coffee and bits and pieces, and clearly we can't divulge any inside information, but you can have a chat with us after the game. Because I've met you before. So any last minute questions? Please do.
How are we managing client expectations with regards to when they first inquire or on board, as we can't actually give them a date for IM because it's not gone through the concept yet, it's not been proven yet. So how are you managing clients, or how is Nicola managing clients? What is she telling them? Is it going to be a month, 6 months, and are these clients still going to be prepared to wait?
Yeah, Nicola.
Yeah, it really depends on the client, the nature of the transaction, what kind of timing that they're looking to achieve, the conversations that we had. Alessandro mentioned earlier that food chains are not our only route to market. We have numerous different conversations ongoing at the moment. So it's almost trying to match those up and then manage expectations from both sides, to be honest. I think that's probably the easiest, simplest answer.
Okay, thank you all, and appreciate that. There's lots of questions there, and we will answer those individually over the next week or two in a formal way. So the scrutineers have passed me their certificate as a result of the polls, which reads as follows. I need to read these out individually, I'm afraid. Resolution 1, I therefore declare the first resolution to receive the annual report and accounts of the company for the financial year ended 31st of December 21 is passed by majority. Resolution 2, approve directors' remuneration report for financial year 21 is passed by majority. Resolution 3, approve directors' remuneration policy is passed by majority. Resolution 4, adopt and approve the company's long-term incentive plan is passed by majority. Resolution 5, to reappoint Crowe as auditors of the company is passed by majority. Resolution 6, authorise directors to determine the amount of the auditor's remuneration is passed by majority. Resolution 7, to re-elect Alessandro Zamboni as director is passed by majority. Resolution 8, to reappoint myself is passed by majority. Pleased to hear. Resolution 9, to reappoint Dr. Thomas James as director is passed. Resolution 10, to reappoint Mr. John Collis, and that is passed by majority. Resolution 11, authorise directors to allot ordinary shares and warrants over ordinary shares in the company in relation to Venus Capital SA arrangements noted above and in connection with the proposed offer. And 2, to provide further general authority is passed by majority. 12 and 13 are special resolutions, so over 75%. To authorise directors to disapply preemption rights in respect of authorities granted is passed by majority. And the last resolution 13, to authorise directors to call general meeting on not less than 14 clear days is passed by majority. Just to note, I think all the votes is between 95 and 99% in terms of passing. So clearly passed, no marginals in that regard. So that concludes the poll. The results will be, well, the scrutineers have informed me that the verification of the poll is still, oh no, that's not right. Publication of results will be by RNS. I'm not supposed to read that bit out because that's in brackets. Ladies and gentlemen, then the business of the meeting is now finished. But in concluding, I'd like to thank you all for your committed support. We do appreciate that. Thank you very much. There being no further business, I declare this meeting closed. Thank you all very much for attending.
Thank you. Thank you.
David, thank you, and thank you for the board for updating attendees today. Could I please ask attendees not to close this session? It should be automatically redirected to provide your feedback in order the board can better understand your views and expectations. This will only take a few moments to complete, and it'll be greatly valued by the board. On behalf of the board of Supply Me Capital PLC, we'd like to thank you for attending today's annual general meeting. Thank you and good afternoon to you all.